Good day, students. Once again, I will be doing this class test one from one of the previous years, and is on the topic of uh, process costing, which is chapter 8 of the textbook. So now we begin in question 1, and question 1 says Blackwood Ltd keeps only one set of books for both its financial and cost transactions. So now the minute a company keep one set of books for their financial and for their cost transactions, that means we are using the system called integrated accounting system, and we are advising, or we've been told that the system that we are to teach on, it is the integrated, not the interlocking, because companies now, they are using one system that combines the financial transactions and the cost and management accounting transactions. So now, which is the one called integrated accounting system. Then it says during the month of March, the following transactions took place. So now we have this transaction that took place during the month of March, and I just want to check what we are required to do before I go through the transactions. The first one says record the above transactions in the general journal. So now this is the main focus. We are doing the general journal of Blackwood Ltd. So now in doing this general journal, then I will start by the first entry, which is entry number 1 during the month of March. The first entry say that there was a purchase of material. Material was purchased, and take note that this material was bought on credit, and the amount for this was 580,000 rands. And we know that when we are doing general entries, whatever you buy always increase on the debit side. So now in this case, we bought material, therefore now material control account will be expected to increase on the debit side, because we have bought material. Therefore now our inventory of material will be increasing by 580,000 rands. It will be increasing by 580,000 rands. Because this material was bought on credit, therefore now we credit our trade payables, or our creditors control, the preferred account, creditors control, who are called trade payables, creditors control. Then our creditors control will increase by 580,000 rands for the material that was bought on credit. Then we go to entry number 2, and we check what entry number 2 has for us. Then now entry number 2 says to us that there was material that was issued to the production department. Remember, we are taking material from the material control, from the material that we bought. And take note that when we bought material, our material control account increased on the debit side, and we increase also our trade payables on the credit side. So now we are taking material from the material control, and we are distributing that material into the production department, so that this material can be used for the purpose in which it was bought for. Because when we buy material, we buy it with the purpose of using, or with the purpose of converting the material into becoming a finished product. So now we took material from the material control, and we issued that into the production department, where it will be processed into becoming a finished product. However, this material was classified into two. Another one was direct, another one was indirect. So now there are two types of material that were issued. So now we know that the direct material always goes to work in process, and the indirect material gets to be recorded under the manufacturing overheads. Always take note of that. So now we are taking material from the material control account. And if we are taking material from the material control account, we expect that the material control account will have to decrease on the credit side. So now we know that material control will have to decrease because we are taking material from the storage and we send it to the production department. And the total of that will be the sum of the two materials that were issued. And if we calculate the sum of the two, that will be 580,000 rands, which is direct, plus 340,000 rands, which is indirect. And this will give us, just calculate that, 580,000 rands. It's not 580, it's 340,000 rands plus 32,000 rands. Then this will give us an answer of 372,000 rands. So now this will be the total cost of material that was taken from the material control into the production department. 372,000 rands, it is the amount. So now, as I said to you, that when we take material from the material control, we reduce the material control, and that material will be transferred or recorded in two different ledger accounts. The first one has to be work in process control, where we issue the direct material. Direct material gets to be recorded under the work in process, which is the production department. However, indirect material is because it is indirect, and all the indirect costs are classified as manufacturing overheads. Remember, all the indirect costs are classified as manufacturing overheads. So now that is why the indirect material will go to manufacturing overheads. It will go to manufacturing overheads. So now manufacturing overheads will increase by the amount of 32,000 rands because of the indirect material that was issued, which was indirect. Therefore, now that will be recorded under manufacturing overheads. Then we go to entry number 3. Entry number 3 says to us that we have the total of the gross wages. Total of the gross wages, and remember, once again, gross wages are divided into direct wage 240 and indirect wage. Remember, all the indirect costs, they go to manufacturing overheads, and all the direct costs, they go to work in process. Same applies. Direct wage went to work in process, indirect went to manufacturing overheads. All the direct costs go to work in process, and all the indirect costs, they go to manufacturing overheads. And the total of this gross wage was 264,000 rands. So now the total of this 264,000 rands has to be recorded under the wage control, because these are the total wages that we have. So now our wage control will have to be recorded on the credit side. However, our work in process and manufacturing overheads will have to be increasing on their debit sides. So now, as I said, that this has to go to work in process control, and this has to go to manufacturing overheads because it is an indirect cost, manufacturing overheads. And that is the total of 240,000 rands for the direct wage, and it is 24,000 rands for the manufacturing overheads. And the total of that will go to wage control. The total of that will go to wage control. So now the total wage control, as they've provided to us, it was 264,000 rands, which is the total of all the wages, direct and indirect, recorded on the credit side of the wage control. Then after we proceed to the next one, we don't know either this was paid or not paid yet. Then we'll take that into account when they tell us so. So far we don't know either there any payment or not. Then we go to the next entry that talks about the wages being paid. Then now it says to us that deductions from the gross wage were as follows. We had pay as you earn, we had pension fund, and we had medical aid contribution of 8,000 rands. And it says now under the next entry, number 5, that the net wages and all the deductions were paid by the EFT. So now meaning we paid the full amount of the gross wage. Remember, this is the total amount of wages that were supposed to be paid, which is the gross wage. Remember, inside the gross wages are the deductions. So now the total amount of all these deductions, it is included under that gross wage, because gross wage is before the deductions were deducted or taken into record. So now that is the gross wage. And entry number 5 tells us that the net wage, and take note, when they say the net wage, they are referring to the net wage because our gross wage is 264,000 rands. And if we subtract all the deductions, which is 42,000 rands, we subtract 14,000 rands, and we subtract 8,000 rands. This will give us the net wage. Therefore, now the net wage is equal to 200,000 rands. Our net is equal to 200,000 rands. So meaning, if we say 200,000 minus 264,000 rands, this will give us the total deductions. Meaning our total deductions will amount to 64,000 rands. So now they are telling us that the deductions plus the net of 200,000 rands, they were all paid by EFT, net of 200,000 rands. And 200,000 plus 64 will give us the total gross. So now I'm emphasizing on that because there is no need for us to show the deductions separately when we make the payment. We can just only record the amount of the gross wage on the debit side. Then after we reduce our bank account because a payment was made. So now we go to entry number 4, and entry number 4, now remember we had our wage control that was recorded here on the credit side. So now we are paying all that wages, or we are paying all of that amount. Therefore now hence we have to debit our wage control. We debit our wage control by 264,000 rands. Remember, 264,000 rands is inclusive of the deductions. So now this will be a payment of 264,000 rands, which includes all the deductions. Then our bank account will reduce by the amount of the gross wage. Then after we go to the next entry and we see what the next entry has for us. Then we go to number 6. Remember, number 4, there was nothing to record, but it's only number 5 that told us about the payment. So now these entries had to be combined. So hence I just combined both of them, because we only made a payment under number 5, which is the one that was to be recorded. Then after we go to number 6. Number 6 says manufacturing overheads paid by EFT 80,000 rands. Don't forget that previously we had other manufacturing overheads that were recorded already. We need not to forget that. We had indirect material, which was a manufacturing overhead. We also had indirect wage, which was also a manufacturing overhead. So now we can see that manufacturing overhead was increased by 32,000 rands, and also manufacturing overheads was also increased by 24,000 rands on the debit side. And once again, now under number 6, we see that there is another manufacturing overheads of 80,000 rands that was paid by the EFT. So now meaning manufacturing overheads once again is increasing on the debit side by the amount of 80,000 rands. So now we record this entry, which is it will be number 5. Then we debit our manufacturing overheads. We debit our manufacturing overheads, and our manufacturing overheads will increase by 80,000 rands. Then now on the credit side, we record our bank, and this bank will have to be the same amount of 80,000 rands. For every debit entry, there should be a credit entry of the same or equivalent amount. So now we have recorded the payment of the manufacturing overheads by the EFT of 80,000 rands. Then we go to entry number 7, where they tell us that administrative expense paid by EFT, this amounted to 28,000 rands. So now we know that admin costs are not related to the manufacturing of the product. So now we just have to record this as administrative expense. So now in the recording of that, we have to increase our administrative expense by the amount of 28,000. We debit administrative expense, this is 28,000 rands. Then after we credit our bank, because this expense was paid by EFT. So now we have recorded number 6, which in fact is number 7. But because of number 4 and number 5, therefore now the numbering will slightly change. Then now we go to the next entry. The next entry is entry number 8. Entry number 8 says to us that depreciation on the factory machine amounted to 26,000 rands. Remember, depreciation is also a manufacturing overhead expense, which is a non-cash item. So now depreciation, we know that from cost and management accounting 1, that it is a manufacturing overhead expense. So now once again, our manufacturing overheads will have to increase on the debit side by the amount of the depreciation, which is to be recorded that as depreciation of 26,000 rands. Then we have manufacturing overheads. Our manufacturing overheads amounted to 26,000 rands, and this is depreciation, so the contra entry will be accumulated depreciation. The contra entry will be accumulated depreciation. So now that will be 26,000 rands. Contra entry will be accumulated depreciation, because depreciation gets to be transferred into the manufacturing overheads, because this was the depreciation that has to do with the manufacturing of the product. So now let me just further explain why we don't record depreciation, but we record accumulated depreciation. Initially, from accounting perspective, when we record depreciation, we would have said depreciation from an accounting perspective, and would have debited depreciation by 26,000 rands. Then after, I would have credited accumulated depreciation by 26,000 rands. This is what was initially done in accounting perspective. Now, at the end of the accounting period, remember that depreciation gets to be closed off. And from accounting perspective, we normally close it off to profit and loss. But now, in this case, this depreciation has something to do with the manufacturing of the product. So now, meaning this was a depreciation for the machine that was used in the production process. So now a depreciation for the machine used in the production process has to be recorded as the manufacturing overheads. So now what we do, we close off this depreciation and we transfer that into the manufacturing overheads. And when we do that, we debit our manufacturing overheads, and we increase our manufacturing overheads by 26,000 rands. Then after, we cancel the depreciation, or we transfer the depreciation into the manufacturing overheads, which is 26,000 rands. So now we have this entry that is left in this case, where our depreciation was debited and our depreciation was credited. So now meaning this depreciation will cancel this depreciation. There is nothing left under depreciation. So now the summary entry, if I may call it like that, the summary entry will be the accumulated depreciation, which is on the credit side, and the manufacturing overheads, which is on the debit side. So now the entries that are left in this case is the manufacturing overheads of 26,000 rands on the debit side, and the accumulated depreciation that is left on the credit side of 26,000 rands. So now that is why when we record the general entry for the depreciation, we record it as this entry. We are recording the third part of this entry. However, initially it was 26,000, then that was transferred into the manufacturing overheads. So now hence the contra entry is accumulated depreciation. And I hope this makes more sense perhaps to someone who needed some understanding in terms of this general entry. Then after we go to the next transaction, and the next transaction is transaction number 9. Transaction number 9 says to us that manufacturing overheads were absorbed at the rate of 35% of the direct wage. Meaning our direct wages, we multiply that by 35%, that will give us the applied or estimated manufacturing overheads. And our direct wages, remember there we had our direct wages as 240,000 rands. So now we say 240,000 rands of the direct wages. We multiply this by 35%, and this will give us the applied or the estimated manufacturing overheads, which is 240,000 rands. We times this by 35%, and this will give us an amount of 84,000 rands. This is applied manufacturing overheads. So now in recording this, I just want to bring your attention once again. The cost of the product, if we are calculating cost of the product, it could be any product. If you are manufacturing a product, a cost must be made of direct material, it must be made of direct labor, and it must be made of applied manufacturing overheads. Not just manufacturing overheads, applied manufacturing overheads. And when I'm saying applied manufacturing overheads, I'm referring to the 84,000 rands that I've just calculated for you, where we say the predetermined overhead rate, which is 35%, then we multiply that by the actual base, of which the actual base will be the actual direct labor cost. So now these three elements, they get to be recorded in the ledger account called work in process. When you do the ledger account called work in process, on the debit side, you might have an opening balance. If there is an opening balance, then after you record the direct material, you record the direct labor, and you record the manufacturing overheads, which is applied, or the one that is estimated, which is 84,000 that we have just calculated. So now this is where the applied manufacturing overheads gets to be recorded. Then after, there is another ledger account called manufacturing overheads. So now if we record applied manufacturing overheads on the debit side as 84,000 rands here, meaning for every debit entry there should be a credit entry. That is why under the ledger account of manufacturing overheads, applied manufacturing overheads get to be recorded on the credit side, and the contra entry will be work in process, because this 84,000 rands was initially recorded under the work in process ledger account. So now I'm bringing this because I'm directing your attention now to the calculation of the over and the under applied manufacturing overheads. So now that means what will be debited, we debit our work in process, and we can see the work in process is debited by 84,000 rands, which is applied manufacturing overheads. However, manufacturing overheads are credited by 84,000 rands, and the contra entry will be work in process. So now this is how you record the applied manufacturing overheads. And it's very important to know the application of this. So now we debit our work in process control. work in process control. I have shown you in the ledger account. Then after we credit our manufacturing overheads. Manufacturing overheads. And manufacturing overheads, this is 84,000 rands. This is 84,000 rands. Now immediately when you have recorded this, and this is something very important so that you do not forget it, make sure that you record this immediately after this transaction. Now if you remember, I said that we had manufacturing overhead that was recorded under entry number 2. Entry number 2 informed us that there was a manufacturing overhead that was debited, and that was 32,000 rands, meaning on the debit side of the manufacturing overheads there was supposed to be 32,000 rands, and that 32,000 rands could have been recorded, and the contraent of that would have been material control, because that was from material. I'm not doing ledger account, but I just want to simplify this from a ledger account perspective. Then after, there was another manufacturing overhead that was paid, that was number 2 here, where we noted that there was wages which were indirect, and those wages amounted to 24,000 rands. And we can see that manufacturing overhead is debited by the indirect wages. So now, meaning in the ledger account, we should have recorded 24,000 rands, and that could have been wages control. Then after, we look for another manufacturing overhead that was recorded on the debit side. Then there is nothing so far up to this page, and we go to the next page. In the next page, we had manufacturing overheads that was debited by 26,000 rands, which was a depreciation. So now, meaning 26,000 rands must have been recorded on the debit side, and that could have been recorded as accumulated depreciation. So now, these are what we call actual manufacturing overheads. These are actual, meaning on the debit side of your manufacturing overheads ledger account, you record actual manufacturing overheads. But on the credit side, you record applied manufacturing overheads. Remember, applied manufacturing overheads is that 84,000 rands that we have just recorded, which was also recorded on the debit side of the work in process. So now, after you have done this, you don't have to do this in a ledger account. Then you first have to say, how much are the total actual manufacturing overheads that were incurred? Let us calculate that total, and we see from there. So there was 32,000 rands. Then we have to plus 24,000 rands, plus 24,000 rands, and we plus 26,000 rands, and this gives us 82,000 rands. So now we can see that the total of the actual manufacturing overheads was 82,000 rands. This is actual. But the credit side is having an applied manufacturing overheads of 84,000 rands. So now, meaning the total here that has to be recorded, it has to be the total of the bigger side. And the bigger side is 84,000 rands. So now, meaning our estimated was 84,000 rands, and our actual was less than what we estimated. So now, meaning our estimate, remember, this is the estimate. This is what we estimated. The 84,000 rands, the estimate, 82,000 rands is what we actually incurred. So now we'll say minus 84,000 rands, and 2,000 rands will have to be recorded on the debit side. And that 2,000 rands will be called over applied manufacturing overheads. And the contra entry for that will be called cost of sales. This will be cost of sales. This will be cost of sales. In this case, we estimated 84,000 rands of the manufacturing overheads, but we actually incurred 82,000 rands. So now, if we incur 82, which is less than what we estimated, meaning we have overestimated, meaning we have overestimated our cost of sales. That is why now the cost of sales are on the debit side, meaning in the ledger account of the cost of sales will be credited by manufacturing overheads, because manufacturing overheads is debited by the cost of sales. So now we have to record the over or the under applied manufacturing overheads, which is number 9 in my sequence. Take note of that, in my sequence. Then after now we debit manufacturing overheads. The reason why we debit manufacturing overheads is because on the debit side of the manufacturing overheads, we have an amount of 2,000 rands on the debit side. So now that is why also on the debit side, I record manufacturing overheads. Manufacturing overheads for 2,000 rands. Then after, cost of sales will be credited. Cost of sales will be credited by an amount of 2,000 rands. Meaning we have to reduce our cost of sales by 2,000 rands because we have overestimated the cost of the product that we were manufacturing. Remember, as I said to you, that the cost of the product is made of direct material, direct labor, and applied manufacturing overheads. Meaning we would have initially recorded under manufacturing overheads 84,000 rands. Meaning now we have overestimated the cost of the product by the amount of 2,000 rands. Therefore now we have to reduce that cost of the product, which is called cost of sales, by an amount of 2,000 rands. Then after, we proceed to the next entry. The next transaction tells us that this was number 9 where we come from. It says under number 10 that 70% of the goods manufactured during the month were completed. 70% of the goods manufactured during the month were completed. Remember, once again, the cost of production is made of material, is made of labor, is made of applied manufacturing overheads. And we know that our direct material that was issued into production, let us go and check that. Direct material that went to production amounted to 340,000 rands. This is the cost of production in terms of material. Direct labor that was issued into production amounted to 240,000 rands. Let me just erase some of my writing so that we can clearly see the figures. Remember, the direct wage was 240,000 rands. So now that was the cost of labor that went into production, the cost of direct labor that went into production. So now direct material went to production was 340,000. Direct labor that went into production was 240,000 rands, and applied manufacturing overheads that were applied to the production process amounted to 84,000 rands. So now, meaning the cost of the goods that went into production will be the 340,000 rands of material plus 240,000 rands of labor plus 84,000 rands of the applied overheads. Meaning now the total cost of production, or cost that went into the production process, was 664,000 rands. Then after, we have to multiply this by 70% because they say only 70% of that was completed. Then if we multiply this by 70%, then this will give us an amount of 464,800, which is the cost of goods that were finished or were completed during the year, which is 70% of what went into the production process. So now in this case, we record that as the cost of goods that were completed. Remember, goods, I said that we have work in process, which is the process of goods that are still in a process. The minute they are done, then they become finished. And the minute they are finished, they get to be recorded under the so-called finished goods. So now let me just erase that, then I record my figure which is already on the credit side. So now work in process in a ledger account will decrease, meaning that will be finished goods of 464,800. Then our finished goods account will have to increase by 464,800. Then this will be entry number 8 in my sequence. Once again, I want to say in my sequence. Then we have to increase the goods that are completed, or we have to increase the goods that are finished goods, by an amount of 464,800. Then after, we are no longer having this value of goods in process. They are no longer in process now. Therefore, now the work in process control must increase by 464,800, because if they are no longer in process, therefore now they must be out of the process. So now we are taking them out of the process. Remember, work in process is an asset. It is the inventory of incompleted products. So now it is still inventory, but inventory of goods that are still in process. And the minute those goods, they are no longer in process, therefore now they must reduce the process by the value of the inventory that was completed. Then after, we increase the value of the goods that are completed on the debit side, which is called finished goods. Then after, we go to the next transaction, and we see what the next transaction has installed for us. Then the next transaction says to us that which is entry number 11, the last one, last one. If you see there is a shaded 1/2. I just removed that one. I made it shaded because I feel there is no need for that 1/2. Sometimes it becomes a bit confusing to other students. And the purpose of the assessment is not to confuse, but to make sure that questions are as clear as possible. Then it says, half of the goods completed were sold on credit. And this is the selling price. Take note, this is not the cost price. And we know how many goods were completed. Remember, goods that were completed says half of the goods completed. The goods that were completed, it is from that 70%. And we know that it was 464,800 goods that were completed. And take note of the fact that there was no opening balance of inventory. So now, if there was no opening balance, therefore now half of this will have to be recorded as the cost of sales. So now, in simple terms, we just say divide that by 2, or you can say times that by 50%. It does not matter, you'll get to the same amount. So now that means 232,400 of inventory was sold, and this is the cost of sales. This is the cost of sales, cost of goods that were sold, and these goods were sold at 278,000 rands. So now let us record the cost price. Then after, we also record the selling price. So now, in doing that, we have the last entry, which is recording of the cost of sales. Recording of the cost of sales. Then after, we record finished goods, because our finished goods will decrease. Finished goods always decrease when we sell them. In this case, we say that it will be 232,400, 232,400, 232,400 rands. Then after, we record the selling price, and because these goods were sold on credit, therefore now we have to debit our trade receivables. Then after, we credit our sales income. They said they were sold on credit for 278,000 rands. For 278,000 rands. So now that means we debit our trade receivables, which are called debtors control if you want. Then we say trade receivables on the debit side. trade receivables with the amount of the selling price, which is 278,000 rands. Then after we credit our sales, because sales is income and income increase on the credit side, and in this case this is income that we're supposed to receive. We have not yet received, we're supposed to receive, but the accrual basis principle allow us to increase our income the minute we earn it, not only when cash is actually received. So now I think this must have been the last transaction with regard to this question, and I have covered all the entries. Therefore now I can say thank you everyone. Hope you have learned and enjoyed this exercise. Thank you.